Hey guys, it's Jordan Meller here, your host of Traders of Money on TradeDelicious. I hope you're all having a fantastic day. We have something special for you today, Mr. Don Dawson, and you will see in just a moment why I loved this chat. His passion, his energy, his humility, everything just exuberates from him, and it was such a pleasure to sit down and pick his brain for an hour. So much so, I want to do it more often. So guys, do me a massive solid. Make sure you've liked the video. Make sure you leave a massive comment saying how much more you want to see Don's content, because I really want to bring him on board and I want to do some weekly work with Don for you guys. So let's make it happen, but I need the love from you guys. So without further ado, go enjoy this episode. I hope you really enjoy it as much as I did, and I can't wait for you to see what he has to say. Cheers, guys. Enjoy. Mr. Dawson, thank you so much for joining me today. You have 35 years of futures trading experience. I mean, that is incredible. Run me through the story of how you got started in this industry.
When I got started, it wasn't anything real fancy. It was, my father had a company and he had a partner working for him. And I just went in there one day and he said something, about his neighbor told him that he had to start putting some money away for retirement. And I said, so what do you got to do? And he said, well, you're supposed to buy these things called stocks, right? And he said, I said, well, how's that work? And he says, well, you buy something here and it goes to here and you sell it and you make money. And I said, you're telling a 20-some-year-old that? And I'm going like, I like it. This is, I don't want to work anymore. But so I just kind of got intrigued by it. And I started going to something called a library, which not a lot of people know about today, but where you just got real books. So I would go in there and I just started studying and reading like the Edwards and McGee's books, Jesse Livermore stories, stuff like that. So lots of reading. And then I just sort of lucked out that there was a commodity or stock/commodity broker living or working nearby me. And so I went into his office and opened up an account. And the first thing I did was just play around a couple of stocks. And of course, back in the 80s, nothing was moving. It was just nothing like today's volatility. So I went back into his office a little bit later and I said, hey, what do you got that moves a little bit more than this? And this is the day back when we used to have green phosphor monitors, or the monochrome monitors, they used to call them. He turns this monitor around, all these green lights are flashing. He goes, well, we've got bonds, we've got gold, we've got pork bellies. And I'm like, it was like love at first sight staring at that screen. I said, okay, how do I get in this? And so he got me into a futures account, blah, 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 and set that up. And so from there, I just started doing a little bit of research, and I found this thing called, it was like a book of the month club, and a company called Hume Publishing would mail it out. And there was this thing in there called a TED spread, and TED was an acronym for T-bills over Euro dollars. Now, Euro dollars is 90-day interest rate paper, not the currency. So T-bills, U.S. Treasury bills, and then 90-day Euro dollars. And basically, you were supposed to track this thing, and if it got to a 1.25 or something, you were supposed to buy the spread. So I tracked it for a few weeks or whatever, and I saw it getting down to this 125. So I called up my broker. I go, hey, I want to buy this TED spread. And he goes like, don't you want to trade a regular futures contract first instead of a spread? Like, which is you're buying one leg and you're selling another leg. And I said, no. I said, I want to buy this spread. And he was like, where did you get this? And I said, I was reading about it in a book. Well, he read me the riot act about books will never make you money, blah, like that. I said, put the order on, like just this cocky greenhorn, just put the order on. I'm paying this guy $40 round term commission. That was way back then. So that's $80 because you got two positions on. Well, a couple of weeks went by and it hadn't moved. It just sat there. And I was like, oh, maybe he was right because I'm just $80 in a hole because it hasn't moved. And so shortly after that, Mexico announced that they were going to default on a loan. All of a sudden, there was this flight to quality. People wanted to be long treasury bills, and Euro dollars are basically US dollars deposited outside US bank or US shores, but there's no guarantee. So people were repatriating that cash back. So they were selling the euros, buying the TEDs or buying the T-bills. Well, I was long T-bills and short euros. So this spread is going like this. I had no idea how much I'm making. I just knew I was making a lot of money. It was like, whoa, 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 whoa. So I let it go for like 2 or 3 days. And I called up my broker. We literally called, like placing orders.
Yeah.
I called him up and I go, you can sell that spread now. He goes, you lucky SOB. I said, of course I know, that's what it was. So anyway, I ended up, after that I started trading. I got into the 30-year treasury bonds of trading. And, we had paper charts back then. Literally, it was a company called Commodity Perspective who mailed a book to us every week. And during the week, we would take a ruler and a pencil, and there was graph paper basically. So every square represented a certain number of ticks. So we would update our charts manually throughout the week like that, just daily. We had no intraday charts. And so I started getting my quotes from the newspaper. That's where they all came from. There was a section there called commodities. Every day I would cut that out and put it on a clipboard. So when I was doing back testing, I was literally flipping through pages like this to get the open, high, low, close for the market that I was trying to study. So finally I had this bright idea. I said, I need to go talk to my broker and see where I can get these quotes, because desktop computers weren't that popular back then. So I go to him and he goes like, well, we'll probably be closed by the time you come by here. But he says, what I'll do is I'll turn the monitor to the window and then you can see the quotes at the end of the day. Well, that works. I would go by there. I'd be out there at nighttime and it's just this old green monitor shining out the window. And I'm standing there writing down the open, high, low, close for my 14 or 15 markets. It rained, snow, what, it didn't matter. Now I'm driving home just happy as a lark, and so I'm putting all this silly stuff into my charts and just drawing them in. And, of course, it ended up the profit I made on my TED spread, I gave back in my 30-year bonds. And I was just going like, oh, this isn't good. And so like most traders, you end up losing what you started out with. So anyway, from there, it was more of, I figured once I started losing all that money, I said, I need to figure out what the heck this stuff is. So I know what these futures are. So I went and I studied for the Series 3 commodity broker's license. And what that did, it didn't teach me how to trade, but it taught me what futures are, which is I'm a big advocate of. You need to know the asset you're trading or understand how it works before you can make money in it. So I felt more comfortable once I got that underneath of me. And I just kept on practicing and practicing. And I was a 5-year self-taught trader as I went through this. And I, we had like four years into it. I felt like, okay, I probably can start making a living at this, And then the next thing was like 5 years. I said, okay, now I'm ready. So kind of lucked out and went into that. It's kind of a funny story, but when I got my broker's license, I didn't ever become a broker, but I did use it for just knowledge of the markets. My dad, nobody in my family really invested. So my dad, when we go out somewhere and he introduced me to a friend, he'd go, that's my son. He's a bookie. No, Dad, by no means. So, it was kind of hard getting started in this when you got a family who thinks you're a bookie or a gambler or something else, And so finally, I guess they kind of gave up on it. And so they just kind of, I guess if that's what you're going to do, that's what you're going to do, So pretty much that's how I got started. And ever since I've loved them. The first trade I ever did was a commodity spread. And to this day, that's my better trading vehicle than it is trading outright. So I really enjoy trading those. And then you can sort of now incorporate like some seasonality and stuff like that in there. But it's just more diversification for different ways of trading the futures markets.
You can just hear the passion in your voice reminiscing the story of just still how much you enjoy looking at these assets.
I tell people, I used to teach for a school for about 15 years for futures trading. And I told them, I said, if you don't have a passion for this, I said, there's a whole lot easier ways to make money. So don't come into this just trying to make money, because that's not what you're going to do in this market. I mean, you're going to have some ups
I think
and
a lot of
downs.
people get, I think a lot of people get that wake up call too late. A lot of people spend a lot of time in trading thinking, yes, it's going to be my ticket for money, but there are easier ways to make money outside of trading.
Truth? I know. So passion truly is what gets you to, to stay with this long enough, because through the ups, it's easy to stay with anything, right? When things are going well, but when things get challenging, that's where the passion kicks in. That's what makes you get out of bed and put the boots on and come back in the office the next day. Because honestly, there were times I wanted to quit so bad. And my ex-wife was so great about this. She kept on pushing me. She says, no, you get back in. I don't know if she just tried to get me out of her hair or what, but she get back into the office, and you love this too much, And she was such a great help to me. I mean, another funny story about with her. Tom Baldwin he was in one of the Market Wizards books, and I was reading in there, and he was the best bond trader in the world. This man came to like Chicago with $25,000 in his pocket and a pregnant wife, and he just walked out on the floor of the bond pit, became the world's biggest bond trader at that time. So anyway, they finally interviewed him, and they said, what's the biggest mistake that retail traders make? And he says, oh, they personalize losses. And I was like, well, that's kind of interesting. And he goes like, yeah, it's like, because in the bond market, we were trading, this is how come I lost so darn much money. But the 30-year bond is $31.25 US cents per tick. So it's the largest per tick contract that we have. And that's when I'm trading with these really small accounts, which didn't make any sense at all. But anyway, while I'm trading in that thing, He says that people would say, okay, if I lost $500, which was only 16 30 seconds in that bond market, he says, if I lose 500, then the retail person or a trader will go, oh man, that was a boat payment or that was this payment. So what they've done now, he says, is personalize that loss, and it makes that loss even more painful than if you just didn't think of it in terms of that kind of money. And we're all supposed to trade with risk capital anyway, but when you're first starting out, you're not really aware of that because you've done everything you could to scrape together the money just to get an account opened up, right? But you're not thinking of it that way. So it got to the point I started thinking, what can I do to help me get away from thinking about losing money? And so, when my wife would come home at that time, or ex, she'd come in, she'd go, how was your day? And instead of me pewing out some, oh, I lost $800 or I made, $2 or whatever, I said, we turned my trading account into bond ticks. So I took the total value of my bond or my trading account, divided it by $31.25. So all of a sudden now my account became the number of bond ticks. So everything was, oh, how was your day? Oh, I was up 12 ticks or I was down four, like that. Nothing about
Mm.
dollars and cents anymore. And it got so cool there because we would go out to dinner or something and she would look at the receipt and she goes, three bond ticks, like that. So we just really played it as a game. But honestly, it made a huge difference for me in my early days of getting away from personalizing those losses. I don't think like that anymore about like, oh, I could have done this with that. I could have done that. And truly now today, everything I trade with is pure risk capital. I mean, I try to encourage people to always trade like that too, because it helps you keep from trading scared at the same time too.
Yeah, it goes back. Sorry, it goes back to what we spoke about just before we started recording here as well. Is it's 90% psychology when it comes into trading. Like you just have to get your head right. You have to be thinking right. Keep your
Yes.
emotions in check because when it comes down to the actual analysis and the probability, arguably some of the most simple stuff. Sometimes we find some of this stuff and we're like, well, that's just a no brainer. But when it comes down to actually executing positions and
Yes.
when we get in, when we get out, that's where the money's made. At least that's what I believe anyway. But yeah, that's just another trick that's helped you trick your mind into resetting as a trader rather than the citizen.
Right. Yeah. And I mean, being a day trader, and that's something I don't day trade anymore. I did years ago, but being a day trader, you've got to be so disciplined because there's so easy for emotions to override your thinking when you're a day trader because, it's all of a sudden it's like, what trading plan? Just get me in, get me out, kind of like that. So that's something I've noticed with a lot of people, especially in some of my classes. People wanted to gravitate to being a day trader when they started out, and I'd ask them why, and they said, oh, that's all I can do. I don't have enough money for overnight margin. And I said, do you realize if you come into being a day trader and that's not your fit, then you're just going to lose that money that much faster. I said, you don't
Mm.
pick a style of trading based on the amount of capital you have, and if you don't have enough capital, then you find something else to do until you do have that to trade the way you should be trading, because you can't trade like that. It's like, oh, that's all I have, so that's why I have to trade this. You're still going to lose that money. It's just going to go away that much faster, in my opinion. So,
Yeah, no, 100% right. It was a conversation I had with Mandy Rafsanjani, who's a psychology coach in trading. The
yes,
beautiful thing she said was trading is so much like golf. It goes, you can have the exact same tools as the professional, but if you can't consistently swing the same way, you're not going to get on the PGA Tour. And it's just,
listen,
I thought that was a fantastic analogy,
that's
which
so true.
bears
So
true.
true. Yeah, trading is about consistency. I mean, we got discipline, obviously, but if you don't have the consistency to follow through consistent time after time, I always tell my students the same thing. When you're trading well, you're bored to death because you're just doing
Mm,
repetition over and over and over. And I said, I always found it when when I wasn't trading well, that's when I was all like, my heart was racing and everything else. And I knew I wasn't on my game. But I was getting away from my strategy when that kind of a thing happened. So I just found that, the days that I'm bored, I'm doing like, I must be doing something right. I'm not excited or anything. I still get excited about the trade, but I don't have the emotional attachment to it as, like I did
mm.
back when I started out. So.
Fantastic. Talking about that, obviously you've been involved for about 35 years now. The way you trade and the tools we have access to have changed. You don't have to go and look outside of a broker's window to get the quotes, right? You got all the data now. How
Very
how has that changed your process? You mentioned you used to day trade, now you're more into the longer term positions. What's the story there? How have you changed and evolved into trading over the years?
Right. When we started out, and like we were on the paper charts, and you couldn't really day trade because if you think there used to be the trading floors or the pits they called them that you had to trade against, and so for me to call the broker call the floor get the orders in, to there, and I'm trying to day trade against that, right? So you can imagine that's about a 10 to 15 minute process. A floor broker or floor trader, when they trade, they could have their hand like this and turn it. That's a sell. That's the time it takes them to make a day trade decision right there. And I was going to compete with that off of the floor. I actually equate that to people who try and scalp the market right now to an algorithm trading system. You're not going to beat that algorithm in a 30-second chart or in that type of a
Mm.
time frame. It's almost, you might get lucky once in a while, but I don't think in the long run you're going to beat them. So even as a day trader, you've got to find a time frame that's a little bit away from those algos. And I mean, that's a tough thing today with the algos traders. So anyway, I did start out with swing trading. I call it swing trading, and that was another thing I learned in my first 5 years was trend analysis. Once I really got something that says this is the trend, that changed a lot for me. So I'm a diehard trend follower. I never buy or sell on the same day. If I have an uptrend, I only buy. If I'm in a downtrend, I only sell. And if it's sideways, I don't do anything. I go fishing. I'll do something else. But I will not. I won't trade a sideways market. So anyway, I did the swing trading starting out, and then it was around the early 1990s, and desktop computers started coming out a little bit. I'm really dating myself here, but the PCs were coming out, and we had the monochrome monitors. We actually had CGA was the first color to monitors, and the pixels were so big they were like softballs. So when the little chart that they used to put up, it was like a Pac-Man screen, if you will. But it was like sometimes the bar was bent like this because the pixel was so big. I was like, you got to be kidding me. But of course, back then we didn't know any better. So I thought, oh my gosh, I can finally compete with the floor. I've got real time quotes coming in. Well, the order wasn't electronically traded like we have the Globex platform today. It still went routed to a broker somewhere, and then they put the order in for you. So it was electronically transmitted to the broker. Some cases it was faxed to the broker because if you had, like, I don't know if you guys have heard of TradeStation, but that was one of the first automated trading software packages, used to be called Omega Research, and you could program it so that whenever your signal or your trade setup occurred, it would call your broker automatically. So in the background, you would hear the phone calling a fax machine, and it would transmit an order to your broker. And we thought that was high tech. So anyway, went into that, and so I tried to day trading on the screen and stuff because we thought, oh wow, we can do this. And about that time, George Lane was coming out with his stochastic, Wells Waller with his RSI. So all this was becoming more popular back then, and it was on the screen, so we didn't have to manually calculate moving averages every day and stuff like that. So we were like, oh, we got a real edge here. And no, it was just, we just through the 90s, with this day trading mentality. And I just realized that's not my trading style. I even in my younger days, I used to tell people when I was in my 20s trading, I'd shoot at anything that moved. And today I've got such restrictions on my trades have to meet such real strict criteria before I'll even take a
Mm.
trade. And so that part's really evolved really well for me in that sense. I don't trade nowhere near the frequency that I used to. So once I realized that day trading really wasn't my game, I kind of fell back into what my trading was spread trading, which you hold for, gosh, sometimes a month and a half. And in the futures market, mine, that is a long time. But in outright futures, maybe 3 to 10 days. That's usually my goal right now because we have so much volatility. It's hard to get a market to move in the same direction for any period of time before it does some form of retracement that tends to take a lot of profit away. So I think that was the biggest thing. I put my toes in the water as a day trader, and it didn't work well for me. And I just realized, okay, I kind of had a philosophy in life. I've always wanted my money to work for me. I didn't want to work for it. So when I was day trading, I felt like I'm at the screen working. So now with swing trading, for me, it's about setting up trends in the afternoon, coming in the next morning, looking to see how the European session went, and then actually placing the orders. And then, a half hour later, I'm going off to the gym for about 2.5 hours and come back and do a little walk around the neighborhood kind of a thing, shower, come in here. I come back for market close and, okay, what was the trend today? And so what that allows me to do is go out and do other things in life, because especially as the older I get, the more I appreciate that I can go do more
Mm.
stuff while my money is working for me. So, and they're not winners. They're not all winners, I should say, coming back. I mean, I have my losing trades just like anybody else does, but I found that it helps take some of the emotion out of the trades. Like when I'm not at the screen watching it, there's so many times prices come back towards your stop. If you're watching it, you just say, I might as well get out. And you make stupid,
Mm.
irrational decisions like that. And sure enough, it works out. And I can't tell you how many times I've come back and looked at a day and seen like I probably would have gotten out there, or I probably would have gotten out there, and it actually turned and went back in my direction. So that's something I found is really beneficial for me being away from the screen. I'm kind of my own worst enemy sitting in front of a screen sometimes.
Yeah, no, it's sounds like as you've matured as a person, you've matured as a trader, and it takes a lot of maturity to realize the fact that day trading isn't your gravy.
Right.
To have the
Right.
maturity and the discipline to be like, hey, I'm beating a brick wall here. Let's adjust what I'm doing. I mean, that
Right.
speaks volumes in itself. So, big props to you. I know from reading some of your stuff and from watching some of your videos that you do a mix between technical and fundamental analysis when it comes down to your trading. How do you balance the two?
I'm mostly technical, but I do like to have. I think the fundamentals kind of give a macro view of what's going on in the market. So for me, I like to. I don't like to micro manage fundamentals because there's too much information out there. Next thing you know, you get analysis paralysis. So I just want to know what the big picture is in the market. And then my other thing from a fundamental standpoint is following seasonality, and I think that's really important to me because and I agree, seasonality doesn't work every year or work all the time, but boy, if I can get that, I find that particular market that's got a seasonal pattern in it. And then I start looking like, okay, what causes that seasonality for that market? And then as I just wrote about the Aussie, about how the crops coming away from Australia, it causes a lot of exporting that goes on. So that means foreign countries from Australia have to buy Aussie dollars at a certain time of the year to buy these exported commodities. And so, boy, if you think about if crops are coming or going in the ground, coming out of the ground at the same times, then the dollar change or the Aussie dollar is going to have a pattern there. And sure enough, it does. Every year around this time, we get this nice spike up until about mid-April. And all that is just money being turned into Aussie dollars. And so that's a good seasonal fundamental there. And then once I get that kind of a confirmation, it helps reinforce this trade almost every step along the way. And the next thing is just technical analysis from there. And also the technical analysis for me is so important because for one, if I'm getting a seasonal buy, I've got to have an uptrend, which I can't tell you how many times that's kept me from just jumping into a seasonal buy while we were in a downtrend because that just kept going down. There's a reason it was a downtrend. It wasn't going to work this year. So I need that technical analysis to confirm that the market is moving or attempting to move in my direction. And then the rest of it is just technical analysis of buying at support in an uptrend or selling resistance in a downtrend. And first thing is, where am I wrong on the trade? Risk management is number one in my trading. It's just, I don't care where I can't make the market go to my profit, right? But I can tell it that's all you're going to get if I'm wrong. So that's what I manage first. And then that obviously sets my targets and everything like that. I typically only have like I scale or all in and then typically scale out. And my first target is a fixed, and then the rest of it is all trail stop. And that's how I
Hmm.
like to trade the market because you never know, you know, if you traders would look back over their year, if you will, they will find that it's usually a handful of trades or a month or two out of the year that really made their money. The rest of the time, they were just kind of like in and out, and making a little bit of chump change, if you will. But there was 1 or 2 months, or a handful of trades that really made your year, and that's what I found, especially in swing trading and as an environment. So that's why I always want to leave something on to run in case this is the one that's going to run. I'd say 9 out of 10 times I don't get that. But every once in a while, you latch onto that one trade where it just runs for it feels like a month, like that, and you just go, finally, it took forever to get this, but it's worth waiting for. And I found too that from my trading in a month, I need at least two good running markets. They don't have to go for a huge amount, but if I can get something into where I've already hit my first target and then a trail stop stays with it for a few days, that usually 2 or 3 times a month, well, I should say two. If I can get two of them a month, that really makes my month. If I don't, like right
Mm.
now is a very difficult time to get a trail stop to work very well because of overnight, we're not getting a lot of follow through for multiple days in a row. You look at the oil market since October, and we have literally just been doing this until that breakout the other day. Gold finally has got some movement in it. Stock indexes like the S&P, it's the same thing as oil. It's just bigger, sort of a bigger cycle swing in there, if you will.
Mhm.
But that part's really difficult if you don't have some follow through. So right now, swing trading in there is not been all that great. But here's an interesting thing about with the two different styles of trading I do. That's called an outright if you're long or you're short the market. But when you're spread trading, you're simultaneously long and short. Crude oil, all that October sell off like this, the spread of being, I think it was shorting the front month and then selling the back month, which made it sort of a bear spread. That
Mm.
spread came down for almost 3 months in a row. It trended down while the whole time while this market was just going sideways. So there was opportunity making money in that, but the outrights were just beating you to death if you were in it. So I really enjoy having two different styles of futures trading to allow that. If I was better day trader, I'd have three, but I'm not a good day trader. So I've come to realize that, and so I just go out and do other things, in stock market or like index funds and stuff like that for longer term trades.
Fantastic. You mentioned that you've done a lot of teaching when it comes down to futures. What, other than the sheer amount of passion you have for trading, right? That's very evident. What led
Thank you.
you to want to teach people how to trade and all about the futures market?
Yeah, you and I were talking a little bit before the show, and part of my nature is about giving. I feel it makes me feel good to be able to give. And I don't know if that's selfish or not, but it does feel good to give. And when you have a skill and you're willing, you share. And now I won't tell people exactly where I'm buying or selling that kind of thing, but I
Mm.
love just being able to help people kind of get their feet on the ground and get started. And get them pushed in the right direction. And so when the opportunity came along to actually instruct these classes, at first I was really reluctant, but then there was opportunities to travel, and I literally was all over the world. I mean, Singapore, Dubai, London, a lot of places, and it was a 5-day class, so we did a lot of travel with that, and met all kinds of different people around the world who had the same, almost some of them had the same passion I did. And then, of course, let's put it this way, half of them had the idea that this was instant get rich money. And you can almost tell that on the first day. And you're just going like, I'm sorry, but that's not what this is going to be about. So I think the idea of just being able to help people and get started for me was something that kind of kept me going to keep teaching. And I just, I probably helped out 2 or 3 individual traders just in a mentoring standpoint, just to kind of help them out. And they seem to be doing very well. And, once you get them moving in the right direction, they're doing pretty good. But I think traders kind of come in and they're looking for someone to feed them a trade, like where to buy, where to sell. And to me, that's not doing you any good at all. I mean, you
Mm.
might make a little bit of money while somebody's telling you that, but what happens when they go away or you don't have that contact anymore? Same thing if it's a company giving you that information. What if they're not around? You're back to zero when that's gone. So for me, it's about, the old saying about, if you give a man a fish, you feed him for the day. But if you teach him to fish, then you can feed him for life. And that's my philosophy on this as well. I cannot stand the idea of giving somebody trading advice, instead of just teaching them how to do something. So
Mm. Yeah, 100%. I agree with you, and that's out of the goodness of your heart, or maybe selfish, but we'll let everyone else decide how that works.
I'll have to tell you, the selfish part of doing this was it kept me, because when I was traveling, I always had my laptop, and I never went away without my laptop. And I'd have like a external monitor I would always carry around with me. I think I had more on that than I did in my suitcase, but it was
Mm.
just carrying that around with me. And I'd set these things up, and I was still trading while I was on the road. The good thing about it was while I was in the classroom, I couldn't be messing around with my charts because it kept me away from the screen. So that part was really good as well too. And so you would just go in and check it at lunchtime or something like that, see if you had to move anything around, and it just went on back into the classroom after that. So it was and the other thing too is while you're talking about trading, it keeps your finger on the pulse of the market. And that's why I kind of got back into writing after I got out of the teaching. I started writing about the markets again because you still do quite a bit of research to come up with these articles. And I just love just studying the markets and studying what moves to prices and the economics of the world and just different things like that. And when I was a youngster, I used to be in custom home building, carpentry back in my day. And I remember carrying these 70-pound shingles up on my shoulder, going up ladders, and I remember going like, man, when you get 60, you're not going to be doing this stuff. What else can you do? So when the opportunity came up, my dad's friend was talking about trading. I was like, I think this is it. So it was
Fantastic.
love at first sight. I mean, first trade I did, and I just said, I knew I'd be in the futures market in some capacity probably the rest of my life. So, and you can do this forever. I mean, there's no real physical limitations. I told my
Mm.
students, I said, it probably will make me stroke out and fall out of my chair, but that's okay. I'm doing something I love.
Yeah, but as long as you get one a month, or two a month,
Exactly.
yeah, the rest doesn't matter. No, that's fantastic. So, in your time teaching and dealing with numerous amounts of different traders, do you see any common similarities? Obviously, we spoke a little bit earlier on, as your friend mentioned in the book, that they really struggle to get past, or any barriers which novice traders seem to constantly hit?
Yeah, it's interesting you bring that up. I still do a biweekly grad event for some of the graduates that I did for out in the Midwest in Kansas City, and I love doing that because it's kind of like coming back and seeing, or well, because we do Zoom, so we can see each other and
Mm,
stuff. We'll carry 28, 35 people, something like that, in there on these biweekly events. And every week I come in, and I used to come in and we talked about the strategy that they learned from the school and stuff. And then I realized, like, you know what? If they haven't gotten that by now, they're probably never going to get it. But I thought, what's more important? And that is trader psychology. And I'm not a licensed psychologist by no means, but what I do just brought in all of my years, all of the bumps and turns and everything I've been through. And those are the kind of things I pick a topic and talk about. Like last night, we talked about one, and it was about like how to become a trader when you currently still have a job. Because you have to
mm,
balance that out, like where's your study time, and then learn about, hey, I might have to make a few sacrifices along the way. I'm gonna have to give up an hour of TV watching, which is pretty much useless anyway. So here's an hour, and then get up an extra hour in the morning because it says, there was a study out and it said that most Americans sleep like 8 hours and 48 minutes or something, and we're going like, all you need is 8. So there's 48, and you take an hour out of TV. There's 2 hours right there that you can now put towards your trading study time. And so those are the kind of things we went over, and I found that to be very useful. And one of the comments that came up last night that somebody wants to talk about in the future is about, I'm scared to pull the trigger, even on sim. So those kind of comments or questions, when they come out like that, that becomes my next topic, to be talking about that. So it's it's interesting because I've been through almost everything that these guys they talk about, and from that fear of doing things, from trying to learn a strategy because there's so much information out there today. I guess in some ways I was lucky when I started out. There really wasn't that much stuff to do, and there was probably 6 markets we could trade that had the volume in there. So it
mm,
wasn't like we were all over the place trading, and we kind of, because the way the trading pits were and the traders who were in the pits, you kind of focused on a market and you didn't really jump around like we do today. Because with electronic trading, we can literally click on any market around the world and be there in a second, right? But back then, you specialized on a particular market. So today, when these newer traders are coming in and they're just overwhelmed with so much, lights flashing in front of them and stuff like that, it's really, I think it's more about just kind of getting them to focus, teaching them how to focus, and get away, or get as much stuff off of their screen that they don't need. We always talked about, you have a core strategy that you use to trade, and I said, okay, you've got that, but you know what you need? You also need core markets to trade, so that every day you come in, you only do your analysis on those markets. If you come in with too many markets on, to look at, like, oh, I'm going to trade them all. No, you're not. You kind of got to pick out the ones that are going to work for you, and then just focus on that. So for me, it was more about just kind of get these people to focus. Makes a big difference in their trading, and then you get to focus, and then it's about applying the same strategy over and over and over again. And for discipline, to following your rules. Because I said, you can have rules, but if you can't follow them, that's not doing you any good either. So we really just sort of, I saw the patterns of, how they struggled just like I did, and just kind of, I try to walk them through the same way that I came through it, and, hopefully save them a little bit of headache.
mm. Was there anything in your journey, in your process of success in the markets, when it come down to that discipline factor? Was there a aha moment or a punch in the face moment that made you wake up and be like, look yourself in the mirror and be like, Don, what are you doing?
Oh
you
boy.
know, I mean, I know that we're traders, right? We do that
Yeah.
almost every morning. But
Yeah.
I mean, as a whole, like, was there a big standout moment for you that really snapped your discipline into place?
Oh yeah, my other passion, it used to be riding motorcycles before this, and well, even after this, I rode bikes for about 50 years, and I just actually sold it like 2 years ago. It's where I live out here. It's gotten so congested and crowded. It's almost like a kamikaze ride anymore. So I was like, okay, when I move out to the country, which I'm planning on doing, I'll get another bike. But I had to get rid of it here. But when I was trading, I remember I had this bike, and I got a margin call from my broker, and I was in the 30-year bonds as usual. And so I'm in there, and he calls me up and goes, "Hey, here's Rosenthal looking for some money for a margin call." And I was like, oh man. So I said, you know what? I was going to sell this bike and I was going to buy a bigger bike. So I said, I think I'm going to sell the bike. I'm going to take that money and put it in a margin call. And then that'll give me money to buy. This is how stupid me as a new trader was, because I was thinking like that money was going to turn into a new motorcycle. Well, guess what? That motorcycle didn't come that year. Okay. I mean, that money evaporated just as quick as the other money went away because I was in a losing trade. I was long in a downtrend. Which, you look back on that and you go, why? So, but you don't know any better when you don't know, So, but I
Mm,
think that was one of those moments where I realized how stupid I could be in the markets. I never really thought of myself as that stupid. I've always been very, very good with risk. I felt like I've got a lot of common sense. I don't have a lot of uh, theory smarts in my head, but I'm loaded with common sense. And that's what I
mm,
thought would kind of keep me out of a lot of trouble. But the emotion or the idea of losing, I mean, I played sports as a kid and stuff like that, and I didn't like to lose then. And when I got into trading and started losing, I couldn't understand, how can I work so hard and lose and not make any money? Doesn't make any sense. So a lot of that was just the psychology of kind of getting my head, you know, changed quite a bit, I guess you'd say, and then taking time to come through that. So, but I think the motorcycle selling that was probably the stupidest thing I did in my trading. I just felt like the one thing you truly loved, it was, I guess my ex-wife was lucky. I probably sold her if I could have. I loved her to death. Don't get me wrong. But I'm just saying, I just couldn't believe I did something that stupid. So,
I think sometimes having these wake up calls, these slap in the faces, it helps. I know
yeah.
I've had one. I got myself into multiple positions with money that wasn't my own.
Uh,
So I've felt that element of, once I got out of those positions, you just kind of sit there. You're like, you are an idiot. Like, what were you thinking? And you feel it. I mean, it's some other type of out of body experience that I can't
yeah.
explain. I mean, it took me weeks to get over the fact of what I did, and sometimes I still look back, but I use that more as a trophy moment to be like, I'm never doing that again.
Yes.
Like, if
Oh,
we do due diligence now, you know.
yes. I believe it was Louise Bedford was on your show talking about this, but she was talking about self accountability. And when
Mm,
she was talking about that, so many, especially today, it's amazing how people, like, you make a mistake and people go, that's okay. Don't beat yourself up, like that.
mm,
And when she was telling you that story, I said, thank you, Louise, because I am so hard on myself. If I make a mistake and I mean, a mistake, I don't know. It's like somebody saying it was an accident. I don't believe accidents happen. They're caused. So I just
mm.
kind of look at it like that kind of a mistake. And I'm like, you know what? You've got a written plan for a reason and you did not follow your rules. I just really crack on myself super hard. And I'm even harder. I was telling a group about this last night. If I win money and I broke a rule, oh man, it takes me about 2 days to get over that. Because if I just say, oh, it's okay, you got lucky this time. No, because that is going to turn into a bad habit of like, hey, you know what,
Mhm.
it worked one time, maybe I'll try that again. But if I really just come down on myself hard from a winning trade when I broke a rule, that's probably the hardest I get on myself. I'm hard when I break a rule and I lose money. I mean, because that's just plain stupid in my book when I break a rule. And I am human, so I allow for some minor twitches. But when you do something really dumb, like add to a position that's not going your way, or I just can't believe I would do something like that, and then I get pretty hard on myself. So yeah, that
But
part
yeah,
has to be covered.
I think it's important to do it. I mean, everything we do, especially in trading, in all areas of finance, really, in general finance, in how you live and your expenses, or even down into trading, the results are from actions we have taken, and these actions could have been taken differently. The decisions we made could have been done differently. Yes, okay, you can sit there and you can have elements of luck. You can have that first spread trade that you put on, and then Mexico went and defaulted on loans. There's that element of luck, but
Yeah,
it's that ambition of like, okay, if this were to happen again, what could I have done better, or how should I have better protected myself? How
yeah,
should I have never ending questions on self improvement? And yeah, I'm glad you brought that up, because when Louise and I went through that, it was I had that example, which was prime time with that trader that was talking to me about it. And it was that element of, yes, when you have a bad day, nothing beats cracking a nice bottle of wine, putting your feet up and forgetting about it. But the reality of the situation is, it's the best time to learn from your mistakes.
yeah. I agree. Yep. And I accept that there's going to be losses and stuff like that. And so at the end of the day, as a matter of fact, in my trading plan, one of my biggest mistakes I'd made before was like when I was day trading, I would be thinking like, okay, if I had a bad morning, I was going to come back in the afternoon and trade to get my money back. Well, I never could make that rule work. So I had to put that into my trading plan about like, okay, if I hit what I call a max loss for the day, the rule says I must get up, close the office down, and physically leave the office. And then that night, I was to take myself out to the nicest restaurant and get a great bottle of wine and then celebrate. And people go, well, why are you celebrating if you lost money? And I said, because I left the office and I didn't come back in the afternoon to trade again. That's what I was. It's not always about money in trading. It's about, did I follow my rules? And that is so important to me. I'm very, very rule based. And if I follow my rules, I'm okay with myself. I'll take the outcome of the trade. I'm not happy about a loss. Don't get me wrong, but it's when I don't follow my rules, that's when it was bad. So for me, putting that in there, and I to this day, that's still in my trading plan. That if I have a certain number, which I'm not day trading anymore, but maybe if I have a week that things are just not going well, and so by Thursday things are just like bleak, I'm like, you know what, I'm going away for the weekend or whatever. But that to
Mm.
me is like, okay, it's a reset or a circuit breaker, and then when I come back, it's like, okay, now I got money left over, I can go trade again when the markets are working or when my head's not so messed up.
I'm glad you mentioned that. I did an interview with Mark Olstead, who's actually a futures trader as well, and we were having a discussion about this. And I asked how he measures success in the market, because personally, I don't. Obviously, it's an element of profit and loss because it's. I mean,
Sure.
it's how we fund our lives.
Yeah.
So sure, yes, we measure success through profit, but majority of my success and how I really measure it is down to process. It's not a matter of, sometimes you can do everything right. If the market's not going to deliver for you, the market's not going to deliver, and it's hard if you beat yourself up when you've done everything right. So I
Right.
tried to get a lot of people to stop thinking about the monetary reward all the time, and
Yep.
exactly what you just said. Go celebrate when you've done everything right to your process, when you've
Yep.
followed your discipline. Yes, it could be a losing day. Yes, it could punch you in the gut when you've lost a bit of money, but going out and celebrating doing the process right. There was an old trick I used to do, and I tell a lot of traders to do, especially starting out traders, is put up a calendar on the wall, the old school calendar, and get a sticker, like heaps of stickers. And every single day, or obviously for swing traders, it might be a week base, but every single day you've done everything right. You followed your trading plan, you've journaled everything afterwards, you've set yourself, you've walked away when you need to walk away, put a sticker on that day. And
Wow.
be
Great.
that element of being proud of yourself when you're able to put that sticker up and you'll
Yep.
realize the process has changed. And then eventually you'll be addicted to the fact that that whole month needs a sticker on every day. You'll be addicted to it, and it'll
That's
be
amazing.
that pressure force into
Yeah.
sticking to your process. And
Yeah.
yeah, I'm
And there's
glad you brought that up because I
that's
relay
self
that 1,000
accountability right
times.
there. Yeah. That's
Mm.
really good. Great idea. Yep. Yeah. I still keep a calendar next to me. I got them on the computers, but I keep one on the wall right there too. I'm just still old school about that. So it was like I ordered a book today. I was just like, and somebody's going like, "Aren't you gonna get like a Kindle or something?" Oh, heck no, I want something I can put in my hand, sit down, and read it. So that's
Yeah,
I'm
where
still,
were they
it's
from? One of those things you mentioned earlier, a library or something? I don't.
yeah, exactly, exactly. Like I still got a bunch of them back here, So, I had a funny story with a book one time I had bought. It was I was trying to remember the guy Toby Crable, and it was about
Mm.
trading. It was about the inside days and the outside days, which was really cool because it was about market volatility. And when markets get compressed, like on an inside day, they typically want to break out. And then if they have a really wide range, they want to stay contracted shortly after that. So basically, that's what I got out of that book, and it was great. I mean, it was good stuff to learn. And then there was a whole bunch of other pages in there, and it was all about charts from 1960 and 1970. I thought, it's not going to do me much good right now. So anyway, somebody came into my office one day and looked at that book, and I think I paid like 150 for it when I ordered the thing. And I got it, and then somebody came into the office and looked at it, and they're going like, "Have you seen what that book is selling for?" And I went, "No." But Toby Crable runs a hedge fund. He ran a hedge fund. I guess he's still doing that. And he said, "I'm just going to write this book. This is all I'm publishing." He said, "I'm not going to be. It's not going to be forever published." And so anyway, I went on Amazon. Look, that thing was up to like, I don't know, $900 or something like that, like in 2 years. And so all of a sudden I was like, you know what? I'm gonna try. If I can get 1150 for this book, I'm gonna see if I just go for it. And I put it on there, and about a week later, somebody from Korea goes like, "I'd like to get this for my boss. Would you be willing to go with that?" And I said, "Sure." I said, "You gonna pay the shipping, blah blah blah?" And sure, yeah, we'll cover everything. Yeah, so I got from 150 to 1150 in a 2 year, and I started thinking like, shoot, maybe I should trade books and not markets. So, but it's so funny because there's people. There's like I got a couple over here on Market Profile from Kevin Coyle and Coy and Peter Steidelmeyer. Some of the original books from that. It's amazing what those things are selling for. I don't want to get rid of those because they got a lot of
Mm,
content in there. I
mhm.
learned a lot about about the markets reading the Market Profile. I never did I can't say I never, but I never really got the grasp of the profile using the distribution curve of the letters per period and stuff like that. But good concepts in there about facilitation of trade and everything like that. So.
Yeah, I use the volume profile in my day trading, so it's
No, I
definitely
can.
something I'm interested in there.
It's Yeah, the whole, I used to tell my class too, I said, think about what is a market, because they always wonder why stops get hit. Why does it always, you put your stop above a high or below a low. It's like, why are my stops always getting hit? And I said, well, it's because everyone knows that's where the stops are. And I said, do you know what the market is? And you look around the class and everybody kind of got this look like, what do you mean? What is it? And I said, the market is an organism. And it doesn't matter if it's a Forex or a stock or whatever is freely traded. A market is nothing more than an organism that eats orders to survive,
Mm,
meaning it has to constantly be looking for orders. Because if it doesn't move looking for the orders, the market stagnates and no one makes money. The exchange doesn't make money. Traders don't make money. Option traders can't make money because there's no premium to sell. So markets have to. And one of the things I was kind of blessed with being going up to Chicago quite a bit and visiting the trading floors up there was watching those guys on the floor trade. No charts, pure intuition. And they would follow the volume, like the market coming or volume coming into the market. And those A, B, and C, D periods, like they talk about in Market Profile, it was nothing to hear when I'm going like, hey, what was that C period high? Because they could see prices were sort of upticking near it, and maybe that was like a pivot high for the day. And all of a sudden, it was like what used to be called the one lot maggots in the pit. And at lunchtime, they'd come in and bid the market up just to take that high out to take the stops out. And all it was. And here's how cool it was. They would bid that up. And then as soon as that hit that stop area, all the brokers in the pit had to do what to get the stops filled? Scream, right? So they would go, no, 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 no. So the floor trader would listen to that. And when did they reverse their trade? When the floor brokers quit screaming, because that meant there was no more orders. And they go boom, and they would cover their trade just like that. And all they did was just pushed it up on one lots like that. All that is just following order flow. When electronic trading first became popular, some of the floor traders who came off of the floor and started doing some screen trading actually came up with software that made a clicking noise for every transaction that occurred. So as the price was moving, if it was a real slow click, like kick or like click, click like that, there wasn't a lot of volume, there wasn't a lot of activity in that movement. But if price was moving and it was going like that, they would jump in at the market because that's what they heard on the floor. It's amazing how the floor traders, how intuitive they were about that. And then when you combine that with like what Market Profile talks about, it's amazing at just getting an inside view of how the market actually moves and what moves price.
mm. We currently we do a lot of work with Financial Juice, which is a financial media company, and they've just launched something called Tick Strike, which is exactly that. They turned order flow into
Really?
audio and
That
the
is
little
funny.
ticks and so it's I mean everything you're talking about is just hitting nail on the head, which is
That's too
fantastic.
funny.
But
Yes, I'm just saying it. I remember because that's about the time electronic trading was getting popular, and a lot of the guys were leaving the pits, and because the writing was on the wall that the pits would eventually close, and the liquidity was
mm,
going away pretty quick. But yeah, and they had to make that transition. Just looking at a chart wasn't working for them because they never looked at that. But they had that audio, and they could listen to that and tell. And especially if you imagine it's after it makes a new high or a new low, and that sound quits, making that real fast click. There's no more stops in the market, and now it's time to go
mhm.
the other way. And it just when you saw that the market just moved like this, and all it was literally was just looking for orders, and that's all it was. So
Don, I'm going to be honest, I could sit here all day and listen to you chat and just chat here. Honestly, it's been an absolute privilege, but we are on a bit of a time limit, unfortunately. Don,
oh,
I want to
okay.
see more of you. I want to see more of your analysis, your understanding. Where do I go?
I'm on LinkedIn. I don't do anything on Twitter or Facebook or anything like that. I just, I'm not the type of guy who puts out there like I'm buying here, I'm selling here. One thing I
Mm.
did learn about that is, especially as an instructor, I never told what my live positions were, because as soon
Yeah.
as I told somebody what my position was, I've now put pressure on myself that that's got to work because I told them I'm long. And what did that make me do? It made me cut my profit short more times than not, because I got to be right. I got to be right on this trade
Mm.
because I told somebody. So I discuss after trades, but I don't like to put out what I'm actually doing right now. So that's what, to me, a lot of that is on Twitter, just talking about that type of stuff. A lot of ego stuff out there as well,
A
and
lot of
I'm
ego
sure
on Twitter.
there's some good stuff out there. Don't get me wrong, but there's so much crap in between it that I just tend to stay off of the social media. LinkedIn has been very well. I'm so happy I got linked up with you and Louise and everybody, getting a great base built up, and we've got a lot of
Mm.
traders around the world too. Just keeping linked up with that. So LinkedIn would probably be the best place for getting in touch and doing some stuff there. And of course, coming
Fantastic,
back
Don.
here, we'll be coming back here. We'll do question and answers or something.
100%, 100%. Yeah, daily, right?
Sounds good.
No, it was an absolute pleasure, absolute privilege, Don. Thank you so much for coming on Traders of Money at
Uh,
Trade Delicious, and I look forward to seeing you again in the future.
Thank you very much, Jordan. I've enjoyed this very much, and just talking about the past like that, I sound like my dad telling stories now. But it's just I've enjoyed this so much, and it was a great interview, and I'm looking forward to come back and see what we can talk about in the future.